Mark Lackey joins us every week and he brings up subjects, but it's been a while since we talked about uranium, and quite frankly, I've been hearing a lot about it, and so has he over the last couple of months. So he joins us once again, Executive Vice President of CHF Capital Markets. Mark, great to see you again.
It's great to be here, Pat.
Okay, uranium, do you get a lot of calls on uranium?
You know, Pat, I would say I get almost as many calls on uranium as I get on gold. I would say right now uranium, and that's been true for me for years, even when I was in other parts of the brokerage business and even back in my days at Ontario Hydro. So I think that there's always been a lot of interest in uranium for a number of reasons, and I think there's still a lot of people out there who recognize that nuclear power is really, in terms of worldwide supply down the road, is really the best option. Okay,
now against that background, uranium's got hammered of late. Do you see it turning more positive? 3 months ago you did, but has it changed?
You know, Pat, I haven't changed my view. Now, admittedly, I thought uranium would be over $40 right now. We're sitting $35.50. We've gone up $1.25 since I was last here, and that I was expecting something better than that. But it all really boils down to one issue. The plant, 71 plants are under construction. They're still going forward. The issue, of course, has been Japan. We were at $72 in March 2011. Fukushima happened, and we've had issues ever since. Japan had suggested they might bring back some of the plants as early as last year. It didn't happen.
Now Japan is about 15% of global demand.
That's
right?
Correct, Pat. In fact, after the United States and France, it's third. So while the Germans have shut down a few plants, which frankly isn't all that significant, Japan having 56 plants out of commission and some of that inventory that's built up in Japan is an issue. So I think that even if we could get back 10 to 15 plants this year, which I think is highly likely, that's going to affect the market. Because number one, it'll show the market that Japan is going to stay in this business. That's very important. The Russians stayed in uranium after Chernobyl. It's important to show that Japan is committed to nuclear power. And secondly, they will start to pull down some of those inventories. So I think that's what the market's really waiting for. The naysayers who are looking at uranium at 40 to 45 for the next few years, where I have it going back up to 70 in 3 years, are suggesting Japan will never get back in. But you know, Pat, as we've pointed out before, Japan, 30 uranium reactors being back would reduce costs 30%. And right now, the steel and auto sectors in Japan are being hurt by these high costs of electricity. They are using LNG at $16 an MCF. We have natural gas in North America at $4.75. So you can see the electricity impact it's having. It's huge because you just can't replace 15 to 20% of your total through energy efficiency.
So the demand will come from people needing energy efficiency.
Absolutely. You've got the auto sector and the steel sector. They'll move production offshore. They will move out of Japan. They didn't do that in the past. They will move. So I don't think Japan has any choice. And the strategy should be to bring back the plants in the southern part of the Japan where there's less opposition. The closer you get to Fukushima, naturally, the more opposition there is.
Okay. What about the supply side of the equation? Where are the Russians as far as their megatons program?
Well, Pat, that's a good question. We saw the HEU program ended last year. So Russia no longer exporting fuel from nuclear warheads to the United States. That took 24 million pounds out of the marketplace. Kazakhstan, they're not building as many mines now because they don't like the present price. In fact, I looked at deferrals the other day, Pat, among Australia, Kazakhstan, and Namibia, and I came up with about 40 to 50 million pounds a year of uranium that I thought was going to hit the market in another 5 or 6 years that won't. So now I realize the market doesn't always look that far ahead, but it should be starting to, because it means that people that were assuming that uranium is going to be there, it's not going to be there at that particular time. This market is going to tighten up.
Okay, we have to do a news flash, but I'll come right back to you for some specific ideas. Right now, let's get the news.
Thank you, Pat. We have a Sun News flash for you right now. This is the story breaking out of New York City right now. I want to show you a live aerial shot of New York's LaGuardia Airport. There are reports this hour that a terminal has been evacuated due to a suspicious package. There's a live shot of the scene right now. You can see a number of emergency vehicles outside the airport. We're being told that Terminal C at LaGuardia Airport was evacuated as a precaution. Law enforcement officials are investigating reports of smoke coming out of a bag. So there is a rather large police presence at the scene right now. This is, of course, a live shot of LaGuardia where there is a partial evacuation underway right now after what appears to be a suspicious package being found at the airport. We're going to be watching this story closely, and we will be monitoring for any updates. We will bring you those as soon as we get them. For now, though, I want to throw it back to Straight Talk with Pat Bolland.
Thanks. Mark Lackey is still here. And let's get to specific stocks that you're following. Forum is one.
Forum, yeah, and that's one that we recommended. If you bought that back in October, you're up about 15 to 20%. We like Forum largely for a couple of reasons. One, they have properties near Patterson Lake. That's where Alpha and Fission had the big find, so they're right on their boundary. They also are going to be drilling there in 2 weeks. They're also going to drill their Maurice Bay property in the next month. And what's key here is when I look at the management team, led by Rick Mazer, these are veteran individuals. And if you go back a number of years, Pat, those people used to work for big companies, and in the old days, they always tended to stay with big companies. What I'm finding today is the quality of management in the small and mid caps in the uranium sector has got a lot better. There's a lot of veteran people who've decided to start their own companies or get involved in the few small uranium companies that still exist at these prices. So the management teams are far better. I think that's really important for investors. I think that with such a few number of companies now with such good management, it's much better than in the old days when, frankly, it was a lot of Vancouver promoters behind these companies.
Okay. Energy Fuels is another one.
Energy Fuels is interesting. And again, this is how the world's changed. They have one of the biggest land positions in the United States for a mid-cap player. They're already producing some uranium, and they were very shrewd. They made about 3 takeovers in the last 2 years, including Strathmore, a company that I followed and owned. That was an exceptionally good move because, hey, buy people at $36, not at $100 uranium. So Energy Fuels has really strengthened its position. They're in about 5 states in the United States, and I think this some point will be actually a takeover candidate because of the strong land position they have in uranium in the United States.
Okay, and then the last one, Lakeland Resources.
Now, Lakeland's a new company. And going back to my point, years ago, this probably would have been, to be quite honest, it would have been a promoted story, Pat, given the way the world was. But now you look at this management team they put together, a legitimate uranium group. They've got very good properties in the Athabasca Basin, and they even brought in a joint venture partner who's going to pay some of the costs. So I like the fact that you've got a very new company that's going to do some drilling here in the next few months because they've now in the last month determined some sites at Gibson Lake. And so again, a different perspective than what we used to see, because some people would say to me, well, a really new uranium company, that's got to be fairly speculative. Not as speculative as it was in the old days. I think a lot less speculative than say it was even 5 or 10 years ago. Really good management team here, and let's see how they progress with their drilling results in the next few months.
Mark, great to have you on. Appreciate it every week.
Great to be back, Pat.
Mark Lackey. He's the Executive Vice President of CHF Capital Markets. Quick break. We're going to talk about the internet and online presence as well as privacy. Don't go away.